Hello guys, sorry for the audio quality. Until I get a new microphone, you are going to quite possibly hear a lot of static in my videos. But let's get straight into the analysis. And yeah, gold has performed, or shall I say has moved a little bit in the past week, specifically on Friday, if you all know. If we go to the monthly chart, as you can see, we are in this ascending channel. You know, it started from around December last year, this is December 2016, and it has been in this ascending channel, bouncing within it for basically the past year and a half, a year plus, almost two, yeah, basically. And we can see this is the current month right now, even though the month has not completed yet. But as you can see, it has kind of poked out of a channel, which hasn't been done before in the previous, months from the downside. Although it has poked and returned back into the channel from the upside. So this is obviously we can't really say much until the month has completed. So when the candle has finished forming. And as today we are basically 2 weeks in, we still have 2 more weeks, so it's very early to make any decisions based off this monthly candle. But if we can look at the previous monthly candles, look at this beautiful shooting star showing downside bearish momentum. Following candle also continued with the bearish momentum and stopped right at the parallel trend line, ascending trend line. And as you can see, bearish momentum has continued so far until now. Now let's drop down to the weekly and see a little more detail. Now when we drop down to the weekly, as you can see, this is the ascending channel, starting from this point and then connecting it to this point and then just extending it to the future. This is the range that we have been in since the beginning of 2018, and then we have been in this range up and down, bouncing up and down between the levels of 1360 or 1366, depending on where you prefer to put your resistance, and till down here to around the 1300 level. Now obviously we broke out of this range, and then we started ranging again, and as you can see, we've ranged after the breakout. We ranged for 1, 2, 3, and this will be this week, previous week. So around a whole month we've been ranging between this area, which was between the support level of 1306 or 13 to 13010, depending on where you prefer to put your resistance, and this level, which is the 1280. So we've been ranging here, going down, up, basically ranging until this Friday. We had a massive drop, which kind of pushed downwards. And as you can see, this is a very big bearish engulfing candle. It has engulfed the previous week and has shown very extensive bearish momentum. Now if we drop down to the daily, we would be able to see a lot more details. Now before we drop down to the daily, as you can see, because of this bearish momentum, the next possible level will be somewhere either around here, around the 1270 area, which as you can see there is some support and some resistance, or the next one after that would be around here, which is around the 1250 to 1240 area. So there's a lot of room to the downside. And if you also want to be very optimistic, as you can see, there is a possibility if we draw the trend line from here to here, from this point, let's say from this point right here to this point right here, and then extend it to the future. As you can see, this is the first bounce. We could be coming all the way up to here, and you can see it lines up with this level anyway, right? So that is a possibility. So if bears continue to hold gold and keep the momentum going, we could possibly see more downside, which would mean we would have maybe around 300 to 400 more pips to go. Now anyway, let's drop to the daily and then see a little bit more detail and clarity on what is going on. Now, if remember, this is the channel, move up, down, this was the range. We were trapped in for almost 5-6 months, and then we broke out, and then we ranged here for 4 weeks, almost a month, around a month, and then this was Friday's move right here. So you can see this beautiful bearish candle which engulfed basically the whole entire movement within this period. Now, as you can see, I have drawn some key levels on my chart, and as you can see, basically this is the top point from the move A, and this would be the B, and then the C. Now if we draw our Fibonacci's from A, swing high to swing low B, you would see that the level that our C level corresponds perfectly with the 61.8 retracement level, and that's where we had a major push to the downside. As you can see, the daily wick was beautiful. Look at that shooting star. Came there, touched it, and then came right down, giving a sell signal saying yes, we are about to go down. And then what happened right after the next day? Boom, we shot down. We barely even moved up for a liquidity grab because the sell orders were just too high. All this was accumulation of sell orders, so once we hit this level, it was go time, you know, and shot all the way down. Now what did it do? It went and even passed, it broke past our 100% level, so A, B, C. So now obviously we'll be looking for extension D. Now if you go with the Fibonacci retracement levels, you know that this will be the 27 extension, and this will be the 61.8 extension level. But I chose to use Fibonacci instead of using Fibonacci retracement, I use Fibonacci extension level. So basically, you know, like the wave AB equals to CD. So when you do that, when you use that analysis, when you use that analysis, and then you draw your point from point A to point B, and then to point C, A, B, so equals C, D. This will be the 1-to-1, and then this will be 1.6.8. So I've already drawn these levels here on my chart, and as you can see here, this is the 1-to-1 level, so AB equals to CD. Another way of doing this very easily is to just draw the length between A and B, and let's just duplicate that and then put it from C to D. So 1-to-1, so our 1-to-1 level will be here, and then 1-to-1.618, which will be here. But now what's even more interesting is if you look at the 1.618 level, what does it align with perfectly? With this ascending trend line, as well as this resistance level right here. So I strongly believe that gold will continue up until this point. Those are my projections for gold, and yeah, I mean, obviously I'm not saying it will shoot down directly. It might come up, retest this trend line, or even retest this broken ascending trend line, or just come here maybe there's definitely a supply zone around here. I mean, demand zone now will turn into supply, so it might retest, accumulate orders before it drops down, but eventually I believe it will firmly come down to the 123.7, so 123.40 at least area. Those are my long-term projections on gold. And if you look at my previous videos, I've always been bearish on this pair. I've been following it, and yes, this is basically my projections. So thank you very much for watching the video. Like, comment, subscribe, and let me know what you think about this analysis. I will be doing this video from now on weekly. I think it's beneficial not only for me but for other people, but more so for me, to be honest, so that I keep up to date with what it is I see in the markets. Yeah, thank you very much, and leave me like and subscribe, and yeah, see you next week. Bye bye.